Hey folks, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Friday, June 26, 2015. This is a daily chart of the Spider, or SPY. And as you can see, we had a pretty flat day today. It was down from the open, and that's why it's a red candle. But all in all, it was a flat day, nothing going on. We did make a low today and then recovered, and I'm going to show you the intraday in a minute. But one thing I want to point out before we move on is, you know how I tell you that markets like to move in, and time is more important than price, and markets like to move in areas of 6 to 10 increments, for example. So I just want to point something out. From the last high, which was last week, okay, if you count that high as one day, you have 1, 2, 3, 4, 5, 6, 7. So now we're on the 7th day today, and if markets move in between 6 to 10 days before they like to reverse, not all the time, but a lot of the times, and whether that's an hourly chart or a weekly chart or a daily chart, doesn't really matter. We can find them all over the place. And here, let's just look at another one. Here's a bottom, 1, 2, 3, 4, 5, 6, 7, 8, 9, and we start down. So since time is more important than price, and I told you that we're coming into around this weekend time frame into early next week, another daily cycle low, or a daily cycle, and since the market's been down, I'm calling it a low. So that being said, we're going to start looking for a turn in the market, whether it's Monday or Tuesday or Wednesday. We're not exactly sure. There could be another down day on Monday. It's possible. But certainly by the time we get into Tuesday and beyond, I'm looking for a turn in the market. That's a short week next week. Thursday is going to be the last trading day. We have the 4th of July holiday on Saturday, so Friday the market's closed. And normally into these long holiday weekends, the market typically, not all the time, but typically floats higher. Okay, why? Don't ask why. Who knows? Anyway, mainly it's because of the light volume, because most of the traders and will be out by the end of the week, and light volume is very difficult for the bears to get any grip on the market. It just doesn't happen usually. Not all the time, usually. Okay, so let's go into an hourly chart here for a second. There's something important I want to show you. So the market was down earlier in the day, and look at this direct hit again of one of these support levels, right? So yesterday we were talking about the 209.91, and then I said, next stop would be the 209.18. And what did we make a low today? A low was 209.16. That's pretty spot on. So these numbers work. They've been working. They've pretty much always worked, and they'll continue to work. And so now, if we did continue lower next week, we would consider this probably some support once again at 209.18. And then if that didn't hold, we'd have to look down here at double bottom. But frankly, I'm not really expecting that. Could it happen? Yes. Am I expecting it? No. Okay. And if it does happen, so be it. If we come into a low here on Monday, then I think that's an all-out buy. Okay. That's my opinion. This is one of those things where this is the risk business. So if you're willing to put capital at risk, you have to pick your spots. And that would be a pretty important spot, right? Could we go lower than that? Sure, we could. And we know where the next level would be. In fact, let's go back to the daily chart. Okay. If this red line didn't hold, then we're probably going to head down to the 200 period moving average and the 204.50, we'll call it 204.50, 205, where this moving average would be pretty good support. In fact, it would be excellent support. So even when we're wrong, we know where we're wrong and we know what the next move should be. Okay, so that should give you some kind of roadmap on where we're headed into next week. Now, if we do see a turn next week and the market gets a bid, we get a rally into whether it's Monday or Tuesday or whatever. If we get that rally, then I suspect that rally, whether it takes us to new highs or not, and I suspect it will, we'll know more as time goes on, but it's probably going to be the last rally before a major correction. Now, what does that mean? I'm going to give you more information on that as we get into the rally, assuming that happens, because what's more important is not the fact that a correction's coming next. What's more important is when is that correction coming and from what price? Well, I can't tell you what price because we don't really have a pivot low yet. And until we have a pivot low, and let's say this is a pivot low here. If this is a pivot low and we start to make new highs, then I'll be able to calculate how high we would go. Right now, I only have two numbers, and they're the same numbers, and they really apply to the E-mini contract. So we'll go over there just to show you on the chart. It would be 2035, which we've talked about before, and the market's got as high as 2034, okay, and that would be not on the September contract. That was on another contract. But the number after that would be 2050. So I would expect we would challenge 2035 again, and then if we got through there, then it's 2050. And I'll give you new numbers as we get there. If we get there, it's not really important right now. But that should give you a good idea and a roadmap of what's going on into next week and beyond. Obviously, we'll keep talking about it, and I'll keep you informed. And as long as you stay close, you'll know exactly what to expect in the market with a high degree of probability. It's not a guarantee, it's not exact, but it does have a high degree of probability, as you know. Okay, let's go over to the gold chart. And I thought what was interesting today, I know these charts are busy, folks. There's a lot of lines on them, but these are my roadmaps. I need these lines. We finished today at 1173.70. 1174 is the number. Isn't that unbelievable how that works? So, and by the way, I must mention something. I know I've been telling you Monday's the end of the month, but I was using an old calendar. I got the new calendar out, and it told me that Tuesday's the end of the month. So I apologize for the error. I don't know what made me think Monday was the end of the month, but nevertheless, I've got the correct calendar now. I was missing a box. Now I've got the box back, and Tuesday's the end of the month. So we're going to have to wait till Tuesday to find out what's going on with gold. Really, I think the market's going to trade right around this number Monday and Tuesday, and that's just the way it works. As you can see, the last few days we've been, in fact, look at all these times we're trading around 1174. I mean, it's just uncanny how this works. It amazes me. It's just amazing. It's unbelievable how the market treats these numbers like a magnet. And now that we know that it's an important number into the end of the month, it's trading right around that number up until the end of the month. All right. It's unbelievable. So there's nothing to do. We have to wait and let the market tell us what to do. Okay. Let's go over to oil. Now, oil, what's interesting is today, I'm going to zoom in a little bit on an hourly chart. Let's try that again. I'm going to zoom in a little bit on an hourly chart, and you'll see 59.30 was our all-important number. And this morning, we went through it, but recovered back up above it. So, you know, this is an hourly chart, and you did close below this twice. 2 hours, you closed below that number. And what time was this? This was at 9 o'clock in the morning, 10 o'clock in the morning, and 11 o'clock in the morning. And the fact that you closed below it, I was actually tempted to go short the market, but I didn't, and I don't even know why I didn't. I think I was just preoccupied with a couple of other things I was trading during the day. But what was interesting was we did get a reversal, and you know, albeit that's a sign of strength one way or the other. So I'm going to go back to the daily, and we'll just review what's going on, because I do have something important. You know, the 59.30 held, okay? That now we closed above it on a daily basis. So the fact that it held has to be, and I'm not saying bullish, but I'm saying it's a bullish bias. There's a difference, right? It's not all out bullish buy it. It's a bullish bias, meaning until we close the day below 59.30, I'm going to have to say that higher prices are coming. And why do I say that? Because just looking through my notes here, and what's interesting is I have a cycle day scheduled for Monday. Now, which way is that cycle day going to take us? Frankly, I don't know, But what I do know is if we start to be trade higher on Monday, then I'm going to say that cycle low, that cycle is a low, and we'll probably see higher prices. And I have one more piece of evidence that's the case, and I'll talk about that later because it pertains to the dollar. But for right now, I'm going to have a bullish bias in oil until and unless we close the day below 59.30. That simple. Can you buy oil here? On Monday, if we're above 59.30, I'm going to say you probably could. I'm going to talk more about that in a couple of minutes when I get to the dollar. But first, let's cover bonds. And bonds, look what they did. This is the TLT, which represents the 20 and 30-year Treasury bond. And here's your daily chart. And bonds closed, or the TLT closed, at 115.23. Now, that's bearish. There's no question in my mind that's bearish. I think there's lower prices coming in bonds, higher yields coming. In fact, let's flip around and talk about the yields again. I've been doing this, and you can see what's going on here. This is an uptrend. ABC, ABC, AB. Well, we'll see where B takes us, right? But this looks to be an extension wave. In fact, interestingly enough, one of the characters I do like on CNBC is the guy Rick Santelli in Chicago at the Chicago Board of the CME. I'm sorry, and what he indicated today, or what he pointed out today, which is really the same thing I've been pointing out, he just described it differently. He pointed this out as an Elliott wave pattern and maybe getting into an extended fifth wave in the yield chart. And that's possible. And he did it with I think he did it with a 2-year bond maybe, but it's the same deal. And here's the situation. If in fact that's the case, then what you would have had is well, it doesn't work with this. I take that back. Because if this was, it would be an 1, 2, and this would normally be the longer extended wave, the more powerful wave, and it wasn't. So I'm going to take that off the table. Whatever he was talking about, that's his business. But I just looked at this and thought about that because I did hear him say that around lunchtime today. So forget that. Basically, it's just back to what I was saying before. We have an uptrend and there's higher yields. Now, here's the deal, though. There's a possibility, and now I'm going to talk about the dollar and bonds in the same vein because it's all the same deal. The oil, the dollar, and bonds, they're not related, but what I'm saying is that I have a cycle turn for Monday in all three markets. Now, let's just take that out further a second and see what that means if it did happen, okay? If, in fact, you saw the cycle turn up in bonds, that would mean that yields were topping out at this double top, right? Sorry. So if yields top out at that double top, if they top out here again, that would be a normal occurrence. It's a normal thing for a market to go into a double top, stall out, and pull back, okay? That's not out of the question. In fact, you did it here, but only for one day, right? You hit this double top, stalled out. He did it so many times. Here's another double top, stalled out, and then went through it. Well, here's another top. You may stall out, and what this would mean is I'm going to flip back over to the TLT. It would mean that this would be a fake out, right? And then you'd reverse higher on Monday in bonds. And if that happens, and we might as well talk about the dollar while we're at it. If that happens, and you see, remember I was saying that you putting in a sideways base for maybe a move higher in the dollar? Well, let's say the dollar didn't move higher. Let's say it moved lower. And you came back in to test the 94.50, which is this line, or even this line down here. That would possibly mean that it would give a lift to oil, okay? Because remember, even though markets trade independent of each other, oil's traded in dollars around the world. So as you have a weaker dollar, that's why you tend to have higher oil prices as the dollar gets weaker against other currencies. That's just the way it works. So what happens is, if we did have a turn in bonds, a turn in the dollar, a turn in oil, would we get a turn in the market as well? Now, Well, I have a cycle day in the stock market. I have a cycle day in oil, a cycle day in bonds, and a cycle day in the dollar. And the only thing I don't have a cycle day in is gold. And we're just waiting on the end of the month for gold. So it seems to me that early next week, and it's plus or minus, right? Maybe it was today, maybe it was Monday, maybe it's Tuesday, but in that window, okay, we have, it seems to me, a very important juncture in the market right now. That's my take, because these cycles don't converge on the same day in the same period just by accident, right? That's just the way markets work. And, let's say all these markets begin to turn on Monday. The media will have all the reasons under the sun why they turn, and then you'll remember that I told you the week before that the turn was coming. I don't know what the reason's going to be. The reason to me is because it's a cycle turn, and that's my reason. If they have reasons like Greece and Iran and Iraq and all this other stuff, whether it's oil or bonds or who knows what, that's their business. I don't really care. Nobody believes in cycles other than just a few of us, right? I guess you do now that you've been hearing me for a while, listening to me for a while. The new folks here, you'll get to understand, all this over time, how I use cycles to determine turning dates. And when, dates and time lines up with price, that's how we figure out where the markets are headed next. So, but the media will have other reasons. It'll be Greece or it'll be something else. And whatever the reason is, that's fine. It's just amusing to me, and I'm okay with it. But other than that, this was that's what I see. So bonds, so we did stocks, we did oil, we did gold, we did the dollar, we did bonds, and I think that's about it. I know some folks like to talk about natural gas from time to time, so natural gas just hit my eye, and I might as well give you my opinion in natural gas. Actually, in natural gas, I'm relatively bullish right now. I think we may see higher prices. What we've done is we've retraced a part of a move. So let me show you a close-up, and this will be one of these little trade lessons here, and you've seen me do this a number of times, but why not do it again? So I'm going to blow this up a little bit so we can see it clear, and I'm going to put a Fibonacci retracement tool on here, and from the recent low to the recent high, what do we have? A 618 retracement. Well, that's not an accident. You've seen me do this dozens of times, hundreds of times, whatever it is, depending on how long you've been here. And so, whether this candle comes, the next candle comes down and makes another low or not, we don't know. But if this 618 holds, then I think we're going to see higher prices. And essentially what you've done is you've made a high, you've consolidated sideways, and hopefully you'll make another high. And what is that also telling you? A, B, C. You've seen me do that dozens, hundreds of times. A, B, C. A, B, C. I mean, it just goes over and over again. I mean, I don't know how many times I could do the same thing and nobody else picks this up. It's just amazing to me that people want to make up all these reasons why they buy or sell certain stocks, securities, commodities, whatever it is. And, all you have to do is just study the charts. The charts tell you everything you want to know. And it's not, the novice, the person just looking at a chart, right? Let's say I take this off, okay? I take this off, and what do you see? Well, the novice won't see anything. They'll just see a bunch of red and green candlesticks and say, I don't know. And I understand that. But when you've been looking at charts for 20 or 25 years, and you see the same thing repeat over and over and over again. Here, I'm going to show you something else. Pivot high. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. All right, so you had 12 down. I say 6 to 10, it was 12 down, and you had a reversal. It's close enough. Okay, it's not an exact science. It's just in the neighborhood of time factors. In other words, the markets move in periods of time. So it's not always 6 to 10, but it's 6 to 10 a lot of the time, right? So then you had a pivot low. You had 1, 2, 3, 4, 5, 6. Went down. Okay? I mean, you can make a case one way or the other. I just see what I see. and it just has served me well over the years. So what I'm trying to do is I'm trying to transfer the benefit or transfer the knowledge to whoever wants the knowledge, right? All you subscribers obviously want the knowledge. I appreciate that. And I want to transfer the knowledge because it's something that you can use in any market, any chart whatsoever, any period of time. So if you get a full grasp of this stuff, right? And there's a lot of stuff. I give you bits and pieces each night. Sometimes I give you the same thing over and over again. I give you bits and pieces. Today I did a video, go see it, on Atwood Oceanics. And the video is how to identify a reversal low or a reversal day in a market or a stock. And it's very interesting. And I might as well bring it up here. And then we'll give it a wrap for tonight. So here's Atwood Oceanics. No, it's not. Atwood Oceanics. Here we go. So let me squeeze this back and let me show you what I'm talking about. Okay. So, well, this green candle here is what's called a reversal day. It's an engulfing candle. You made a low and then you made a reversal and finished on the high, and you basically engulfed on the downside and the upside, finishing on the high of the previous day. That's a textbook classic engulfing candle, and that is one of the signs of a reversal day, okay? Now, another sign of a reversal day, this high volume day, you had 8.5 million shares against an average day of 2.2, 2.3 million shares, okay? That's important. That's a lot of volume for Atwood Oceanics, okay? So this was a bona fide reversal day, but there's something more important. Whoops. Let me show you this, okay? How about a weekly chart? How about a reversal week? We'll see. So we had a high volume week. We did 18.5 million shares this week. Okay, the last time we did anything close to that was this week here, where we did 17.5 million shares, okay? And that was, I wouldn't say, well, I guess it would be considered a reversal week. I mean, it was a high volume week. It was a big up week. Okay, so you made a low below all these lows here. And that's important because that typically will scare out some people at the lows. And then that would scare out the weak hands. Then the strong hands step in, start buying at those lows and push the market higher. And if you look at the 60-minute chart, which is an hourly basis, you can see here, put in a low, and then the market was persistently up the rest of the day. And back to the daily chart, you put in your high volume engulfing candle reversal day, and what to expect here. And there's another reason, and I didn't tell anybody this on the video I put out specifically on Atwood Oceanics, but I've done some cycle work on Atwood Oceanics as I saw this week developing, and I saw this as a potential high volume, or a potential reversal week. I didn't know it was going to be high volume till it was over, but let me show you one more thing. One pivot high. 1, 2, 3, 4, 5, 6, 7. We'll see what happens next week, but you can see the same thing repeat over and over and over again. How many candles down from here? 1, 2, 3, 4, 5. All right, came up short. That's okay. But you had 7 candles down and a reversal week, a reversal day, and I did some cycle work, and we should be in the zone for a longer-term cycle reversal in Atwood Oceanics, okay? So, how do you play that? If you want to be long Atwood Oceanics, you can do one of two ways. Well, let's talk about weekly and then daily. If you want to be long for a longer-term investor, okay, you can buy Atwood Oceanics. Your low is $25.89. You can put a stop or mental stop, and you could stop out on a weekly close, meaning a Friday close below, what was that, $25.89? I already forgot. $25.89. So a weekly close below $25.89, you're wrong, or I'm wrong, and you're out. On a daily basis, it's really the same number because it's today's low, which is $25.89. But that's one way to play it, and you should see multiple up weeks, not every week, but you should see a pretty significant rally. On the other video I made that's out there, I said you'll go into the 20-period moving average as a first level of resistance. And yeah, that's your first level of resistance. All told, I would expect this to go higher, and it depends on how fast it goes higher and how extended the market can get, or can the market get extended, because you're going to need both. You're going to need participation from the stock market for this thing to have a multi-week rally. But it seems to be coinciding with everything I'm talking about. It looks good. I mean, I am a buyer of Atwood Oceanics. I think I'm going to put it in the portfolio on Monday, and we'll go from there. So I think that's a wrap, folks. Have a great weekend. I'm David Frost, my strategic forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.